Welcome to this Hard Asset Podcast with Bill Youngerman. Our subject today is hard asset investing. On this podcast, you're going to learn a great deal about hard assets and why they've proven such strong investments throughout our history. You're going to learn a few keys to safe and successful hard asset investing and explore a few trends that may help you make profitable portfolio investments today. But before we begin, I want to introduce you to Bill Youngerman, so you understand a little about why the Hard Asset Podcast began. Bill is a knowledgeable and trusted gold and precious metal dealer in Boca Raton, Florida. His firm is William Youngerman Incorporated on Palmetto Park Road in downtown Boca. And he's a PNG certified, the mark of distinction among reputable gold and numismatic dealers in the U.S. He is a PNG certified member of the Professional Numismatic Guild. He is also a member of the ICTA, the Industry Council for Tangible Assets, the ANA, American Numismatic Association, and a member of Florida's United Numismatists Association. Bill Youngerman is extremely knowledgeable and experienced in precious metals, coin, and currency investing and collecting. Having served the South Florida investment community since 1967, he's seen a lot and has a wealth of experience to share that will help you succeed in your hard asset investing today. Welcome to this podcast, Bill. Let's talk about hard asset investing.
Okay, hard assets are metals such as gold, silver, platinum, and collectibles. It's basically anything that you own that has no liability attached to it.
Okay, let's talk about some of the keys then to investing in hard assets. And why should people be looking at hard assets as a potential investment?
Okay, hard assets have, in the long term, especially gold and silver, and have actually done well in preserving one's wealth. And for that reason, it's prudent that people own at least some percentage of their portfolio in hard assets. It's like an insurance policy, a financial insurance policy.
Okay. What percentage is appropriate, and how would someone determine what percentage they should have in a hard asset like gold or silver?
Most financial planners recommend 5 to 10% of our assets should be in some form of hard assets. At times, that should be increased if the economy dictates such as, for instance, in inflationary times or times of real government and financial crises.
Okay. What are some of the keys to investing in hard assets that I would want to know if I was a new investor?
Well, some of the keys, you want to know, of course, who you're dealing with. You should do your research to find out, is that person an accredited dealer? How long have they been in business? If they're a member of the Professional Numismatists Guild, which is the only organization that has real teeth in it, we have to abide by a strict arbitration board should there be any disputes, and everything we sell has to come with a lifetime guarantee of authenticity.
If we're talking about who we're dealing with, what would be some of the things that I should be looking out for? What are some of the potential dangers or things that could happen if I'm not dealing with someone who is accredited in that way?
You could be being encouraged to do business in coins or some kind of level of investment that is not in your best interest or that may have very high premiums. You do not want to go on margin to buy things, and a lot of people will try to get you to buy more than you can afford. Other times, they will try to get you to buy something that you know absolutely nothing about, that you haven't had time to do your education on. And the main thing is to always take delivery of what you're purchasing.
How important is timing?
Well, timing in life, in fact, is everything, isn't it? And when it comes to timing in any investment, it's very important. The problem with timing can be alleviated by buying not all at once, but leveraging into your purchases, say 20% at a time. If you're looking to invest X amount of money, take and divide that into 5 periods of time and watch the market for opportunities to enter in at a lower level than maybe the trend has taken it.
Okay, so Bill, how would I, as an outsider looking to invest in hard assets, how would I know what those 5 points in time should be?
Okay. Well, to begin with, if you're an investor and you have no precious metals or hard assets in your portfolio, the time is immediate. If you have hard assets in your portfolio and you're looking to add to them, then you need to look at the basic trends. The trends meaning the relationship that or the rate that they've been climbing or descending at any given time. What we like to say is don't jump into a market that has run up significantly, or to look at a chart. If it was straight up, you may want to avoid that timing. And by the same token, you may look to buy when you see the price on a chart going straight down as if it was a fish line.
What would you recommend right now in light of that? What type metals would be best to buy now?
Gold, silver, and platinum are three favorite metals right now. Silver is trading at the best ratio we've ever seen practically. Ratio meaning the number of ounces that you can buy for the same price of 1 ounce of gold. Right now, you can buy 85 ounces of silver for the same price of 1 ounce of gold. Historically, that ratio is normally in the 40s. And that means that silver could literally double in price and gold wouldn't have to go up a single dollar. And the other one that we look at is platinum. Platinum right now is trading for about $500 less than the price of gold. Platinum is 15 times rarer than gold and historically has always sold for more than the price of gold. So you look for opportunities like that to take advantage of and buy at those times.
Another thing that I think that our listeners could do if you're looking to learn about the trends and what's taking place is you have a new newsletter coming out, and that newsletter traces the precious metal trends and gives some information about those that might also be helpful to someone who's looking to invest in hard assets. And we'll tell you about that after the program today. Bill, so let's talk about the percentage. Go back to the percentage of your portfolio in hard assets. So you said 5 to 10% is what most experts recommend, and perhaps higher at times of greater volatility. If I wanted to get started investing, how should I go about that practically, simply? What would I do?
Well, practically and simply, you have to first locate the dealer. And you should try to locate a dealer that's local to you. If that dealer maintains a position in the metals wherein you can walk into his office or store and put your money down and walk out with that metal, that's the most desirable situation. That way you can key into the fact that you know what the price of gold is at that given moment, what his premium is at that particular time. And it takes all the guesswork out of that area, and it also, you're not sending money off possibly to somebody you really don't know.
I guess that would also refer to ETFs, exchange-traded gold funds, which is a relatively new in the history of gold, a relatively new way to buy gold. What is the benefit of taking gold possession, Bill, over investing in an ETF?
Once you do not take delivery of your metal, you're no longer dealing in a hard asset. You're dealing in something that could potentially have a liability attached to it. And that means that you may be buying an ETF in gold, GLD, for instance. Each share supposedly represents 1/10 of an ounce of gold. It's stored somewhere, supposedly, but it's highly unlikely that the number of ounces that they're supposedly storing are not actually covered with gold contracts or some other means of covering their positions, which may have nothing to do with actual physical gold. The other side of that is you can't really call them up and say, I want delivery of my gold. And that precludes the whole reason for owning precious metals. As far as I'm concerned, you no longer have a hard asset. You have numbers on a piece of paper from your broker's office.
Bill, when you said that gold is a security and that it is something that is beneficial, especially in difficult times, why is that?
It's beneficial in times of political and geopolitical unrest, but mostly it's the point of that it should, in the long term, preserve the buying power of your currency. No matter where you live in the world, if you have gold, it's literally an international currency. And that gives you the opportunity to preserve not only the buying power of your dollar, but it preserves the ability for you to exchange that gold for goods and services worldwide. That gold to the person in Venezuela today may not mean anything in Venezuela unless he can find somebody that will take that gold. But in this United States, people are coming over from Venezuela and they're bringing their gold jewelry. They're bringing any kind of gold or hard assets they have because they know that in times of crisis, that can meet their needs financially.
My final question, Bill, is about investments. So in addition to security, in addition to being a valuable part of your portfolio to preserve your wealth, the investments themselves can often be quite good. How do they compare to the S&P 500, for example, generally speaking?
Generally speaking, again, we go back to the word timing. And because timing is everything, the time you enter into your purchases can dramatically change the outcome in the short term. But in the long term, it still preserves your wealth. For instance, if you had bought gold in 2011, you might have paid $2,000 an ounce. Bad timing because it hasn't been back up there since 2011. But if you'd have bought it at the lower levels in 2015, 16, 17, you might have bought gold at $1,100 an ounce instead. that would have given you a nice return already. The same thing could be said about the stock market or bonds or a host of other investments. So it goes back to our timing question. But if you're spreading out your purchases over a period of time, you eliminate that risk. And again, if you go back to what we originally said, you don't buy markets when they've run up dramatically in one direction. That would have prevented you from buying gold, because gold ran from about $1,300 to $1,900 in about a week or two. So you would avoid that kind of market. In fact, if you had precious metals at that time, you might have even considered selling into that market.
Well, so investing in hard assets, the keys, timing, percentage, 5 to 10% or more in times of volatility. And the best way to invest is to find someone who you can trust, to avoid ETFs, to take possession, as you said earlier, Bill, in the actual precious metal, the gold itself, that you don't have to take any chances that something happens to that particular company and you're caught. You suffer as a result of that. Anything additional you'd like to discuss about hard asset investing you think would be helpful before we close?
One of the other things that we look to with our clients is that we explore areas in the different metals and in items that are of great value at any given time. For instance, right now we're recommending to our investors the United States Proof Eagle gold coin sets. These are selling for hundreds of dollars less than what the U.S. Mint charges for them, and they can be purchased from us for just $80 over the price of gold right now, which is the lowest level they've ever sold for since they've been issued in 1986. Then they consist of a 10th ounce, a quarter ounce, a half ounce, and a 1 ounce size gold eagle. These give you a variety of sizes made in special production for collectors only, and they give you one of the best buys that we've seen in a precious metals in a long time. And there's other areas that we also recommend to our clients so that they can take advantage of not only the price of the metal, but also buying an item that has excellent upside potential with its numismatic and collectible value.
You've been listening to the Hard Asset Podcast with Bill Youngerman. Successful investing in hard assets, precious metals, coins, and currency requires knowledge, and one of the best and simplest ways to educate yourself is by subscribing to William Youngerman's Hard Asset e-newsletter. This newsletter contains great current information about hard asset investing, reveals recent trends in precious metals with a brief commentary, includes background and pictures of interesting hard asset collectibles that will help you gain knowledge of this fascinating field, and even contains new current additions to Bill Youngerman's own collections in Boca Raton. To subscribe, simply visit the website at williamyoungerman.com and click the Subscribe to the Hard Asset e-newsletter button at the top of the page. It's that simple. Thank you for listening to today's podcast, part of Bill Youngerman's goal to help make you a successful hard asset investor.